Hey guys, welcome back to Bursa, September edition, where we talk about everything about everyday Malaysian finances. On my far left, I have, of course, Mr. Chuck here, who's supposed to represent the everyday guy, and he's going to ask everyday questions. And our special guest today is Mr. Bo, a friend of mine. He's also the former Deputy Group Executive Director of KIN, you know, the one that makes the fans, KIN's group, KIN's Holdings Berhad. He was also the former MD of Inti University College, right? He's got 30 years of experience in corporate, in finance, in accounting as well. He's in various sectors. Now he is retired. Now he's retired. He's now a Vistage coach. And some of you who have actually been to our events would have seen Mr. Bo as one of our trainers training about value investing. So welcome, Mr. Bo.
Oh, thank you, Alvin.
Good morning.
Thanks for the invitation. Good morning, Chuck.
Morning. Mr. Bo, as a person who just renovated his house, I have to say I am a fan of your former work. I have a few KIN fans in that. And just wanted to ask actually about that transition. I think we were talking a bit about it off screen just now. Like you went from MD of Inti, which is
education.
Education, into the group CEO of deputy CEO of KIN, which is electrics or electronics, right?
Electrical.
So how does that transition kind of happen?
Because my whole life I'm a professional manager anyway, right? So I manage people. Now, when you look from a business perspective, what do you normally manage? You actually manage people, right? The things that you do, technical things, are technical things that you can learn.
Yeah.
But the most difficult part is people. If you can manage people well, you get a team well, the business will run well.
But assumedly, like the culture of a company of somewhere like Inti versus somewhere like KIN would be tremendously different, right? One would have people in factories, and another one would have people in like classrooms and teachers, and they're very, very different kind of people. So, like, how do you handle that?
I think the things that I personally learned over all these 30 years is that how much attention you put into a factory worker, whether you can get connection with him or not.
Right.
Okay. I just read a book by Marcus Buckingham, okay, a very famous author. He wrote about the myth in corporate world. In the corporate world, there's a myth that says the most important asset of any organization is the people. That's a myth. You say the truth is actually the most important asset in any organization is trust. Right? Now, you can have a whole team of highly performing people, but they don't trust each other. You're going to have a disaster in the company.
Yeah, absolutely.
But you have a group of just very average people, but they trust each other, they're going to be the world beater. So that's why when I do the transition, to me, what is important is that can I build a connection with my team?
Yeah.
I mean, that was the thing. I mean, I can learn many things from them. They can teach me a lot of things about electronics and tell me about fan, what kind of capacity, what kind of thing to do.
Yeah.
But when I go out, I don't talk to another company CEO or another supplier to talk about all this technical thing. I can bring my whole team there.
Yeah.
Right? So if I can manage my team well, then that is where the success is.
Okay. So then, from all that stuff, like group CEO, like managing director, and now, you do training for EquitiesTracker.
Bo also sits on a couple of boards as well.
Yes. So even up until now, you still sit on a couple of boards, right?
Yeah.
Why do you choose to do training for us, actually? Because obviously you have a lot of career options, right? You could, be doing a lot more better things than sitting here talking to two guys.
Thank Alvin for.
Okay.
At that point of time, I was just retired.
Yeah.
I just retired 2019. And I've been attending your classes since 2016, 15.
Yeah.
I've been repeating. And by the time I retired, I have nothing to do. And I was in transition to become a business coach.
Yeah.
So Alvin would say, hey, Bogo, nothing to do. Why don't you come and teach for us? I learned tremendous amount of knowledge on investing from Alvin. I always joke about that. And sometimes the two of us teach together.
What's the joke?
I said, in any university, the white hair guy is professor. Then the younger guy will be teaching profession. I said, in ET, it's just reverse. Okay, the black hair guy is the leading professor, and this is a teaching assistant. And I learned tremendous from Alvin because we are accountant.
Yeah.
We have a certain mindset. We think we knew about number.
Yeah.
We thought we knew all this ratio. We are damn good in that, and we damn bloody ego, right?
Yeah.
In a way.
Yeah.
But what happened to me was that I got belly burned in the 1997-98 financial crash. Badly burned. I'm quite dark, right? Right. That's the result of that particular.
Since
lesson.
1997, wow.
And I stopped investing.
Yeah.
I stopped dealing in stock for 20 years.
Right.
Until I knew Alvin. Alvin said, hey, we are conducting this class. Why don't you come and join us? So I went. Initially, I came with the notion that okay lah, I got time to spend. But I learned, I really opened up my eye. Hey, this is how you actually look at company.
Could I say it's like going from being an expert at maths and learning about economics? Is that a similar kind of transition, or in terms of mindset?
I think I rather put it another way.
Okay.
Rather than knowing about all your accountings, right?
Yeah.
And what Alvin have taught me during those years, they share a lot of knowledge, is knowing about life and business in the real sense. Numbers are just numbers, but business is out there. Business is what you see in the unwritten numbers. Okay?
Right.
Things like the most funny part, one of the things that he said about, you want to know whether a company is generous or not, look at directors' remuneration, how much they pay themselves. Things that...
So meaning to say that if they're generous with themselves, they're generous with everybody?
When they're generous with themselves, they're not going to generous with the minority shareholders.
Okay, it's the other way around.
And he actually, at the point of time, he introduced me one company. I think they're doing the window frame.
Yeah.
You see, look at the directors, how much they pay themselves.
Right. So actually, this is actually the first time I'm hearing about this particular theory. Like the company... So what, is the dividend like inversely proportionate to the director's salary, or? No,
we're looking at management behavior, or ownership behavior, or controlling shareholder behavior. So, we have come across companies, without mentioning names, where let's say they make 10 million, but they pay themselves 5 million. So therefore the profit is now 5 million, right? Then they pay half of that out to shareholders, of which they own 70% anyway.
Yeah.
So that's what we see happening.
So you would look at a company in terms of like whether or not the people running it prioritize themselves or prioritize the company.
Right.
No, I think it's about
style.
Having shareholder alignment.
Yes.
Okay.
Yeah. So whether they're with you, just like our snowball is investor centric.
Yeah.
Are they going to be investor centric? Because if you're not investor centric, then it's unlikely your share price is going to move up.
Yeah.
Fair.
Because investors are smart lot of people, right? They want to see the
Sometimes.
behavior on the management team and the directors, the owners themselves,
Yeah.
right? So so that's why I learned a lot. This is just one of the examples, right? So it changed my perspective of looking at numbers. So instead of just looking at numbers, we look at trend, we look at what is happening around the world.
Yeah.
And mind you, because I'm from the accounting profession, I do notice that a lot of accountants are very number specific.
Yeah.
So that is probably one of the pitfall in when you look at investment.
Right.
They don't even know what's happening around the world. Again, we have this butterfly effect theory, right? A butterfly that flip their wings somewhere in the world will cause a typhoon somewhere else.
Yeah.
Right?
Yeah.
So, but then numbers are just numbers.
Yeah.
I think what I had learned over the last few years in ET was that there are more things to that.
Yeah.
Right. So that's why like a topic like today is about everyday finance. Actually, it happens for a reason and it's going to affect something else.
Fair. Speaking of which, let's look at some numbers. Days ago, talks about foreign net inflow into Bursa accelerates to 1.4 billion. So we do know that there's more foreign funds flowing into Malaysia now. I just wanted to ask you guys, like, okay, so let's say I'm an investor and I read this. How does this influence my buying or selling decisions at this point in time? So we know that, of course, last month we had a big red zone in the KLCI where it dropped quite suddenly, and it's recovered somewhat since. And then now we see this news. So as an investor, what is my mindset right now? Like, or what should it be? Why are you laughing, Mr. Bo?
then I'll watch out for Bursa counter. Now, because I personally, there's always been my thinking after all these years. If there's 1.4 billion inflow into Bursa Malaysia, then I'm going to look at this particular company called Bursa Malaysia. Because their business is going to be good.
Yeah. So
that's how I look at it.
So wait. Let's back it up a bit. For those who don't know, Bursa Malaysia itself is its own stock.
Yeah, it's listed on its own exchange. Yeah.
So is that normal in other countries as well, where the exchange itself is a stock counter within the exchange itself? It's like Inception type stuff, right?
The first one that happened in the world, I believe, was the ASX. That was back in 2003, I think. 2004.
Oh, then Bursa was when?
Bursa was 05, I believe, 06. 05 or 06, I believe. I can't remember exact date. Then followed by Singapore, either before that or after that.
Oh.
So it has become commonplace. Correct?
So we were a trendsetter.
We're not the first lah, but yeah. Okay,
What are the implications of that actually?
Well, okay, so the history is that most stock exchanges were all state-owned. That's normal, right? So what happened was, the Margaret Thatcher era of privatization, which happened here in Malaysia as well. You got Post Malaysia, you got Tenaga, used to be LLN, and so on and so forth, right? And I think this is maybe a lot later, but kind of just became part of that
same team,
privatization. So from being a KLSE, Kuala Lumpur Stock Exchange back then, they renamed themselves as Bursa Malaysia.
Yeah.
And it is a bit, what was that word they call it? Inception.
Inception, yeah.
Yeah, because they are a regulator and they are also listed, they also regulate themselves.
Yeah.
On their own stock exchange.
Yeah.
Yeah. But of course, there is another regulator, which is the Securities Commission that actually regulates the stock exchange.
Which their own will never be listed, hopefully.
No, I don't think. Okay. Because this itself is a business, right? So they make money from trading volume, from trading fees.
Yeah.
The more volume, more buy and sells, regardless market go up or down, they make money. Right?
But earlier you're talking about shareholder alignment, and this, I mean, in a sense, is a shareholder alignment, right? I mean, the fact that the value of their company is based on the
it will
performance
be interested
of
to the shareholder.
Yeah.
1.4 billion coming in, trading.
Yeah, they make money on value and volume.
Okay.
Yeah.
Which means they've been stagnant for the last few years because obviously we know that the Malaysian stock market has been largely...
except for maybe the bump during COVID where
that was huge.
Everyone was crazy about stocks, right?
Huge.
But that was a one-off phenomenon,
Yeah. So, okay, back to this. 1.4 billion coming into the Malaysian market. Is this big news? Is this something that's...
I think when you look at these flows, you need to look at it over a period of time. So as we know, if you look, we've been tracking this since they started publishing this data more than 12 years ago.
Yeah.
What we have seen is that for foreigners or foreign investors, typically invest when they believe it's cheap, when they think there is a good prospect. So maybe that's the meaning more because they are quite agnostic, right? They don't really care about politics or whatever, right? So if you look at it as a gauge of prospect or going forward moving, it's definitely positive because there have been net outflows from foreigners since 2016.
Non-stop. Every year, I mean net lah.
Net lah.
Yeah.
Net since 2016.
Every quarter.
Well, they publish this every month.
Okay, every month.
Yeah. So we have been net outflows since 2016. So that's why you can see the market has been a bit right?
Jam.
It's like a deflating balloon.
Yeah, something like that lah.
Okay.
So these foreign investors, they split between institutional and retail.
Yeah.
But the retail one is so insignificant. Really, this number is really representing institutional.
Yeah.
Okay.
Yeah.
So in other words, good news. It means that people are interested in Malaysian stocks.
Well, we got two foreign banks who say that Malaysia is cheap or undervalued, right? So then I guess...
What a coincidence that you bring up undervalued, because our next point is... Ringgit no longer undervalued. May hit 4.25 by year end, says economist. What are you guys' thoughts on this? So there's a few things to unpack here. First of all, what's causing the ringgit to, I think we talked about that in our previous shows, what's causing the ringgit to increase in value, or as you say, for the US to decrease in value. That's the other thing. And the second one is, at which point do you agree, or maybe I can get you guys to say what is the ringgit's true equilibrium value to the USD?
Wow.
Yeah.
That is very technical already. Probably beyond my knowledge.
Okay, just like let's say, okay, I get you guys to call out a number, okay, at the count of three.
Okay.
So we did that before, yeah, it's quite fun.
Yeah.
It was quite fun. So call out a number that you think is the equilibrium value of the ringgit to the USD. Okay, 1, 2, go.
$4.
350. Mine's old thinking.
Mr. Bo is more of a patriot than Alvin. Alvin got,
Should be $2 lah.
No, I mean, looking at the years of because basically what I thought about is that it's through the economic development of Malaysia compared vis-a-vis US, vis-a-vis Singapore, vis-a-vis China, right? We can't go back to $2. That's for sure. We can't.
When was this $2?
There was
$2.50, I think it was
1996,
250, yeah.
250.
Yeah.
In the early 1990, 92, and at the point of time, we are still talking about sterling pound 3 something, right?
Aussie dollars only 2.
Correct.
Yeah.
I don't get to say this often, but I think I'm too young to remember this.
I remember this.
Were you born at the point of time?
Probably, but didn't have any USD for sure.
Okay. So but then over the last 20, 30 years, you can see how country progress, how the economic structure have changed. Singapore have changed from semiconductor to service, very high tech, finance, okay? Whereas China had moved from agricultural-based company now to one of the world-leading manufacturers. US have gone from manufacturing to high-tech. Malaysia still moving along. Every time we want to hit something, but somehow we just tend to be moving a lot slower compared to the rest of the world.
Yeah.
So in that case, your currency will not be catching up with other people in terms of your parity in your demand. So for I just being a bit more patriotic than Alvin in the sense that going back to 3.5 is what I wish for.
So basically, how you value a currency, at least in your perspective, is the aspirations you have for what our country could be, like its potential.
Yes, precisely. Because if your country is moving to a more progressive sort of advancement, right? Yeah. Then you attract a lot of people to come in, right? When you attract investors to come in with more FDIs and things, then your currency demand will be bigger. So then that will bring the gap down a little bit. But if people say, well, I can put my money in Singapore, I can put my money in Indonesia, or I might put my money in Vietnam, then there's less demand on your money anyway.
Having spoken to Alvin quite a few times about this topic, I feel like his answer is going to be slightly different. Like, what's?
Yeah, I think again depends. Time frame matters, right? I think what Bo is talking about is much longer aspirational time frame or where we should be. Of course, I think most recently we all know that we didn't really strengthen, but it was the weakening of all the G6 currencies. Because we were not the only ones that strengthened against the USD. So and this is on the premise of what really happened. The most recent thing in the last 2 years was interest rates, right? Interest rate hike from 0 to 5.5%, and then now 5.5%, probably longer term over 2.5%. So that's where we're going to see some strength, the weakening of the USD versus the ringgit. Good and bad thing, because we are mostly export oriented. So this appreciation will actually hurt some of our local companies, right?
Doing exports, but for importers of goods,
correct.
A strengthening of the Malaysian ringgit and make the things cheaper.
Correct. So I mean there will always need to find a balance. I think what we don't want is a very strong. You want to fast dips, right? Or very quick strengthening or weakening.
So like just trying to wrap my head around this lah. So what kind of companies, Mr. Bo, like would be net importers that people should look at, like say like, oh, the ringgit is strengthening, these people are going to benefit from this? Like what kind of companies are we talking about? Like maybe broad categories rather than naming
Especially
specific.
companies that have a lot of imports, raw mat from overseas, and their main market is Malaysia.
Such as?
Such as like for me, probably my previous company,
Kind.
Kin.
Right.
They actually import quite a fair bit of things from overseas.
Not making stock recommendations, just to be clear.
I mean from the business perspective, that means that
yeah.
we have a lower exposure to US dollar because the cost coming down.
Yeah.
And our main market is the main market was actually Malaysia market.
Yeah.
Right. So that will be the quite a drastic sort of kind of improvement.
And then people like car manufacturers that are less CBU and more CKD.
CKD,
Yeah, more
especially
CKD.
do a lot of CKDs, even CBU for the matter. You're importing in foreign currency, right?
Right.
So when the strengthening of Malaysian ringgit, so they will hopefully make the car cheaper.
And the ones that would probably see a hit from this kind of thing, net exporters, like who are we talking about?
Exporters would be a lot of manufacturers, mostly
Manufacturers are
manufacturers.
from furniture to electronics to quite a fair bit of things.
Okay, interesting. So Alvin, you think 4 ringgit? Mr. Bo, you think 350? Woohoo!
Because 350, we can go overseas more.
What year was that? 350 was what year?
No, during the Mahathir lockdown.
Yeah, that was 1998 when they
98.
pegged it.
The
380 lah.
380. Okay, that's probably the
380.
closest 98. Okay, I can remember 98. Yes. I couldn't afford to go to the UK at the very last minute, so I studied local. Yeah,
So that was a genius of Inti College at the point of time.
Well, you always talk about your ex-company, man.
That is precisely because there are 2 person. The industry itself was very creative because we knew a lot of students who got stuck overseas.
Yeah.
Their parents just couldn't afford it.
Yeah.
So another person, frankly, I mean, he got this creativity. Najib was the education minister at the point of time.
Yeah.
He was the minister that actually approved for local institution to run a full UK degree entirely in Malaysia. So that's why we call it 3+0.
Yeah. Yeah.
So students can actually do the entire degree 3 years in Malaysia and get a UK university degree.
I mean,
That was a creativity at the point of time.
for me, my parents didn't let me go because they caught me smoking, lah. But I mean, that's a different matter. Painful days.
I think maybe next year we might see maybe $4 or maybe below. I'm not sure.
Wow.
Right.
For a lot of travelers, we're very happy.
Okay, so just KIV, Borak Bursa September 2025 edition. Let's revisit this and see. Maybe we'll get Mr. Bo in again so then we can actually replay this clip from 1 year ago and see how correct you guys are. Lah. Okay, let's go on to the next topic. So the next topic is quite interesting. So this was a post that Alvin has on his social media. You guys can check it out at Alvin Equities. So this one was part of a series that we're doing. It's called EPF versus the world. And what we try and do is compare our, very well-loved retirement plan to retirement plans in other countries. And this is, we're comparing it to Indonesia at this point in time. And it was really interesting because what we found is that Indonesia has a much smaller fund size and subscription compared to other countries like, say, Malaysia and Singapore. And we're talking about a huge difference, right? Alvin, maybe you can talk a little bit more about this post?
Yeah, so we figured that, we did one for Thailand, we did one for EPF equivalent in Thailand,
Singapore,
Malaysia, Singapore,
Japan.
and Japan, Indonesia we did.
Okay.
Yeah, and it's actually quite interesting how each country has set up their mandatory retirement plans.
Is it a reflection of the culture in a way?
I think it's more a reflection of where the economy is at this point in time.
Okay.
So if you look at the low participation rate, is that if you go to Indonesia, something like 200 islands, number one. Yeah. I think just to administer the country is not easy.
Yeah.
Physically, right? Geographically. I think second one is that because it's still very much an informal economy.
Yeah.
So where daily wages is commonplace.
Okay.
Yeah.
Let's talk a bit about this because I know you mentioned it in the video as well. Informal economy meaning not as well documented, or
where what we Malaysians are used to now, you get a job,
Yeah.
meaning walk in, you go through the hiring process. There are labor laws. Of course, they have labor laws there as well. And then you have a bank account, and then you get paid at the end of the month. That's what we're used to, right? So in Indonesia, for example, you can just do daily wages, right? You work for the day. There's no IC or anything or whatever you give them, and then you just get paid at the end of the day cash, and then you leave, right? I believe a large part of Indonesians are still unbanked at this point in time. So it's still very much a cash economy. So when I mean informal, that's what I mean, right? So it's not a steady job all the time. Of course, capital cities and rural areas are different. But this is a very general statement.
Okay.
Yeah.
I think many also probably due to the education level and the kind of government structure being set up. Malaysia, Singapore being a former colonial of British. Now, British, even though is on the way down, but they set up one of the best administrative systems in the world, be it in Malaysia, Singapore, India. They are very meticulous. I think they have set up a system. I think this system is a lot of legacy way back. I think Indonesia, when did they start their national saving plan?
Not too long ago, actually.
Precisely, I think probably also...
Right? It's a recent thing.
Well, I wouldn't say like 2 years thing.
No, it's not 2 years. Probably
20 years.
But Malaysia, as far as I can remember, I worked 40 years ago,
And you got EPF already.
I got EPF, right? Okay. So I think it's a legacy system there from many generations. But we were a bit lucky, probably during the colonial days. The Brits, the United Kingdom actually left a lot of system for us.
So EPF came from them, you say?
I'm not sure. Probably Alvin can do a bit of research. But
that's interesting.
Because as far as I can remember, my dad, have EPF because when I was young, my dad do a bit of small business. He contributed to EPF.
Okay.
And I was in my teens, right? So when I come out and work at 20, I have EPF contribution way back. So our system could be a lot longer than that.
Right.
Then and over the years, people also know you use EPF for your old age, and government force it, and people and also I think in many ways, culturally, Malaysian, especially Chinese, they love to save. I think that culture. I mean, Singapore. You say Singapore is a lot higher. Because they all love to save. Right. I mean, one of the factor I always look at it. When we talk about the economic situation in US, and I went to US this year, UK, and I went to China just recently. I went to all three countries. People were talking about economic climate. China is bad. But then when I went to US and went to UK, I can only say the word of sadness. I mean, I was staying in San Francisco, Union Square, but even that area you can see shops which are empty, But when I went to China, everybody was buzzing. So people still come back and say, hey, China economy is bad. Then I think about it, realize that no, yes, it's bad. Because they make a lot less money.
Right.
Last time they're making billions. Now they're making a few hundred million. So to them, they make a lot less money.
It's all relative.
Relative term. But then the one thing about China is the saving rate is very, very high. Right? I think that probably will also tells a bit of picture in Malaysia and also in Singapore. People are used to saving.
Right. But I mean, that's an interesting point because these kind of things is cultural. I remember when I came out to start work, and I was like, first time hearing about this EPF thing, right? Never heard about it before. And I was like, I have to give away 11% of my salary. Wow, big chunk way,
After that, get used to it.
Wow, correct. Yeah, you get used to it. After a while, it's just you just don't even think about it anymore.
No, then we go for next employment. Do you play EPF or not? Do you play EPF or not?
And then, fast forward 20 years later, EPF says, oh, everyone must check their balance. And I go check my balance. Wow. Okay, I suddenly feel very good about myself, I'm like, wow, this is 11%, okay, I mean, this is worth it, the power of compounding interest, right? You never even think about that.
Now people complain if the company don't contribute to EPF.
Yeah.
And now yesterday I read a news, employer who don't contribute to them, they will be barred from going overseas.
Mm.
There are about 600 of them, you know.
So, with regards to the percentage, like what is the downside here, Alvin? Like when you posted this up, like I think in okay, just to clarify again, in Malaysia, our EPF is around 65%
5%.
of our GDP. In Singapore, CPF total is about 85% of their GDP.
Yeah.
In Indonesia, it's only 16.5%.
3.5.
3.5%.
3.3.
3.3%.
Wow.
That's
3.3.
that's crazy, right? Assumedly, this means that the majority of Indonesians are gonna have a bad time once they retire.
Well, this is the reason why we talk about pension or savings plans or retirement plans, because it's going to be a social issue, right?
Yes.
Yeah.
Huge.
That's the whole idea. So I think because again they are still in that very much growth phase lah. So I would imagine this would become better over time as they formalize the economy a little bit more.
Yeah.
But I think at least they started lah.
Okay.
Yeah.
Fair enough.
I think very interesting point where Alvin brought out about it's a social issue.
Yeah.
Because if I remember correctly, I read a book by Ray Dalio.
Mm.
Ray Dalio was talking about the rise and fall of nation.
Yeah.
Right. And this could also become quite a huge problem in the United States because people don't have savings and they are living longer.
Right.
And so the government, what they can do is that they can print more money, give it to the people.
Yeah.
But then the money got to be backed by
Something.
national debts. Okay, you can't just print, or else you be just like the wartime Japanese
thought
just print a lot of paper
US the only one that can keep printing, right?
because they still have the credential. They still have the credential of being people who will buy your bonds.
Because people still accept the USD.
USD, but
Yeah,
then if one day US dollar no longer become the dominant currency in the world, your money will become worthless. And where do these people? So US actually have another big problem where people's saving rate is so low.
Yeah.
And what they have, Ray Dalio actually foresee that what happened if US dollar have not won or failed to or stopped to become a world dominant currency.
Yeah.
So they're going to have this kind of problem. So I think Malaysia and Singapore will have these high saving rates in many ways. Okay. Give a certain safety net when you retire.
Yeah.
Even though they talk about you need to have 200,000 for you to
Yeah.
retire comfortably. Actually, it's not enough.
Yeah.
Frankly, if you have a certain lifestyle, it's not enough.
Depends on your lifestyle.
And
Depends on
Korea,
lifestyle, yeah.
Korea actually have a saving plan. I also read another piece of news from the Chinese newspaper. Korean senior citizen dare not retire now.
Because their saving plan wasn't sufficient enough.
Yes.
I mean, we have a classic example, right? You go across to Singapore, just across the causeway, and you go to McDonald's or any fast food chain, and you
you
have
see the people
senior
working,
citizens working, right?
Yeah.
Yeah.
So it's obviously going to tell us one, yes, they have very high CPF rates.
Yeah.
But obviously it's not enough.
It's not enough
The
because
safety net's still
inflation.
not enough. Yeah.
Yeah. So it's close to impossible. Like reality may hit, but it hits people later sometimes. But
Yeah.
the moment you start working, you need to have the mindset to start investing.
But-
Yep.
Okay.
This is a part. It's just forced savings. That's not ever going to be enough.
Yeah.
Yeah.
I think that's from a macroeconomic perspective. From a macroeconomic perspective, can I also say that if you have less of a safety net, that then puts pressure on the younger generation to take care of the older generation, which would prevent them from taking more risks and being more innovative early in life, and that might also stagnate your economy.
Oh, that is a very interesting topic. I write an article every week.
Yeah.
That basically actually I learned something. And when you more advanced in age, right? Few things don't do. Don't take afternoon nap. Okay. Don't take afternoon nap.
Fail.
Don't eat to a full stomach. You have to eat about 70%.
Fail.
Then you have to read. You have to write. The write actually stimulate your mind so that you
Fail and pass.
Okay, right. and the question you just mentioned, the kid got to work harder to support the parents.
Yeah.
It's no longer the case, because the kid I just remember when I came out and worked, when I became a manager in 30 years ago,
Yeah.
my salary was about 3,300
Okay.
a month. And I can buy a car, I can buy a house.
Yeah.
Today, how much a manager will get? Some of the company, even the manager also get 4,000.
No lah.
4,000, 5,000. I mean, I have seen
McDonald's manager maybe lah, but I mean
no. I mean, you when you are looking multinational, yes, they are talking about close to 5 figures, right?
Yeah.
But then there are a lot of medium-sized Chinese SMEs and things like that. Their managers are 4,000, 5,000. I have because now being a coach, I have a lot of SME owners. Their managers are being 4,000, 5,000.
Yeah.
And mind you, the 30 years time gap, the inflation had gone up. My chao kway teow last time was $1, you know.
Yeah.
Now it's 11, right?
Correct.
Now,
duck egg ah.
huh?
Must have duck egg on $11 must have duck egg.
No duck egg. It's chicken
Really,
egg.
man?
Really?
$11 no duck egg ah.
No duck egg.
Mr. Boy, I need to recommend you a different restaurant already.
And mind you, the $11 it started from 7 during the COVID time. And over the last few years, from 7 to 11, you know, the rise is about 50%. But the salary have not grown the same kind of quantum or percentage. So when you look at the saving, right? Okay. Now the kids, there are two sides. When they got married, they got to support their own kid.
Yeah.
During my time, a babysitter cost you 300 ringgit.
Yeah.
Now it costs you a 4-figure.
I know this from experience, yes. Yeah.
So
my daughter turned 1 yesterday, so yeah.
Precisely. So you pay a lot more, but then the salary have not grown in such an extent that for the younger generation to support their parents, now it's become a much challenging task.
Yeah.
So that's why they're not retired. No, I put it, but that is generally the kind of scenario that you people were facing.
Yeah.
The children may be having better education, okay, having better capability to earn money, but then the thing is that they got to support a young family, which is a heavy burden.
Yeah.
And with the parents who are aging, with more commitments on medical, healthcare, and things like that.
Yeah, and healthcare is not getting cheaper either.
It's not getting any cheaper.
Yeah.
Right?
Yeah.
So I think these are the things that what Alvin brought up on the saving side itself, provide some form of a safety net, but up to a certain extent.
Yeah.
Right? But for Malaysia and Singapore, you are more well covered. But for Indonesia, hopefully they'll catch up as quick as possible.
So I feel like this is what makes the series so interesting, because we have this very reflective, mirror of retirement funds, right? Like you look at it in different countries and it reflects in some ways the culture of that country. And now looking at this, like I never thought of it as in like total amount of funds versus GDP, which means it's a reflection of culture. Like you said, like some countries save more and some people save less.
And Alvin because of Alvin class, I use this as a test case to a lot of people to prepare, especially young people, right? to encourage them to start investing now, because Alvin always talk about there are two engines in the aircraft. One, your active income, one is a passive income. But then you don't build a passive income like me. I'm a bit regretted why I know him when I was 50 something. I should know him when I was 30.
But then he would have been like 10. 11 years old.
But he's a master at it. He's
what to invest in, boy?
No, but he's a genius. He probably learned a lot more when he was 10 compared to me when I was 30, right? Now, I always ask this question to a lot of people. And mind you, I ask people who are good in accountants, business people, how much you invest in, let's say, 100,000 today, have a return of 15% per annum, 20 years, how much would you get? And up to today, I only got about 3 or 4 persons who give me exactly the right answer. One of them is my cousin brother, who's an engineer.
How much?
What will you guess?
Repeat to me the figure.
Okay,
again.
if you have 100,000 to invest in some very good companies, right? And the return a year is 15%, which is good.
Okay.
Warren Buffett do 20 something, right?
Yeah, 20.
Okay,
15 is mere mortal like us who have a bit more knowledge, right?
Yeah.
After 20 years, of this 100,000, how much will be grown into? How much will it grow into in the year 20th? Now your daughter is, no, it's a good thought for him. Your daughter is one. Now you need education fund. So you put 100,000 today.
Yeah, I put with him already.
Yeah.
yeah.
I
Then,
literally call it my daughter's education fund.
right, by year 20th, when your daughter reach 21st, okay? Birthday, you can give her as a present.
Yeah.
How much you think the money will worth? At the point of time, in
I
absolute
know this
terms.
only because Alvin taught me this already.
Yeah.
But okay, let me do the math. Okay, so the figure that Alvin always says is if it's 15%, you will double up every 5 years.
Wow, good.
Okay, so that means 100,000 first 5 years, 200,000, second one 400,000, then 800,000, and then 1.6 million ringgit.
Yes.
Correct.
Yes.
Yes. Yes. I feel like I just passed my
but
SPM
how
again.
many people who actually thought about, wow, they all, even many people tell 400,000 because they think about 100,000 plus 15,000 next year.
Yeah.
Then after that, there's 115,000 plus another 15 or 20,000. So they just add up just 15, 20, 30,000. I thought it's 400,000.
Yeah.
Without realizing the compounding effect
Yeah.
of giving you a saving which is much more. I mean, let's say we can't do 15.
Yeah.
Even you can do about 10.
Ironically, this is very close to the figure that I put in, and it's close to the CAGR that we were getting. So
Yeah.
I'm on
But
target.
I think I also add, and that's without putting in money.
Without putting money, you just putting an
right.
initial sum.
Right. So if say over 20 years and you put in 10K, that's another
Every year.
200,000, right?
Precisely.
And that's without any compounding.
You did a calculation recently, right? Like the 50,000 to a million thing within 10 years, was it?
I think I can't remember the numbers, but yeah, if you just like $1,000 a month, you could progressive over time, right? Because in the next 20 years, maybe your second half of the 10 years, you may earn more, you might put in a bit more, right?
Yeah.
So it's just about setting a plan in place, right?
Now,
And-
this is exactly what you need to be done.
yeah.
It need to be done.
So
On the
mandatory
individual.
investment, yes.
Yeah.
Tak cukup.
Mm.
Investment, definitely need.
Yes.
Okay, so running out of time, need to get on to the next topic. I think there's
Yeah.
one more topic here. This. Actually, it's two more topics, one more after this. So, got to change cogs quite a bit. Sorry, I didn't have a sexy segue for this one. But essentially, I wanted to talk about a very specific term in this. So, the news is basically that Nestle price has fallen below 100 ringgit for the first time since 2018. Okay, we can talk about the reasons and everything in a bit. But one of the things I wanted to talk about is like this very common headline of wiping out, 2.36 billion of a company's market capitalization. Now, you always see this headline, and I always thought like it feels like clickbait a bit like
It is
because that money is not real. It's not like someone set fire to 2.36
Burn a chunk of paper,
like a giant
No one
wall
burned $2
of
billion
money,
away, right? Yeah,
like
yeah.
that Joker or something,
Yeah.
It's basically, I mean, correct me if I'm wrong, it's the share price times the number of shares in the market.
Yeah.
That's
right?
it.
That's it.
So if something goes down like 10 cents, but if you have, 1,000 shares in the market, I mean, a million shares in the market, then you lost 100,000.
Yeah.
Something like that.
Correct.
Right?
Yeah.
But like you said, stocks is a sentiment
Sentiment-driven.
driven thing. So when something like this comes out, do you guys do anything about it or?
I mean, it's a nice headline. It's clickbaitish. I remember Nestle is one of the case studies we've always used.
Yeah, we always
It's
use.
in your opening class, the GPS lah.
Yeah, since 2006, 2007, we've been using
we'll be
them.
using that.
They were $24, $26 when we
Yeah.
first started using them. I remember this quite clearly. So it went from 26. We thought it was a good company. It's a good
Yeah,
company.
good company.
It's got, you look at we use it as a case study for financial numbers lah.
Yeah.
To learn how to read financial numbers. But the thing about Nestle is that, fundamentally you can say it's very sound, it pays dividends, it's got net profit and so on and so forth. Again, it's not asking you to buy or sell, but it's a case study.
Yeah.
But if you track the share price, it went 20, 40, 50, 60, 70, right? Then it hung there for a while,
Yeah.
and then it went to 150 in a very short period of time, less than a year. One of the reasons was they were actually included in the FBM KLCI, our index. Now, because I still remember this, they have 234 billion shares. 234 500,000 shares. Exactly 234 500,000. That's how many number of shares they have, and they've never changed since they were listed, right? So that's why
There's been no share splitting or
no share split, nothing, right? So
Okay.
we've kept it at that. So for a small number of shares,
yeah.
and because the shareholding 70% is actually owned by
Right.
Nestle SA in Switzerland.
Switzerland, right?
Oh,
So you only have a balance of 30%,
right.
right? And these kind of stocks that are $80, $100, $150, your average retail investor is not going to buy them because it's quite well proven. Average investor likes penny stocks. Anything below 10 cents, right?
I see where you're getting. It's very interesting.
So the sharp rise and fall can happen in a very short period of time because it's extremely thinly traded, right? So if you trade
Right.
5,000 shares,
Shares.
you jump it up 5 bits, right?
Yeah.
And also, sorry, in Malaysia, you minimum have to pick up 1,000 shares.
100.
And 100.
I'm sorry, 100 shares. Yeah,
100.
sorry, 100 shares.
So I think if you look at the trading volume every day, probably 10,000 shares get
shares.
traded.
Probably.
Yeah.
So if someone big wanted to exit or enter the stock, it would drive it up. If someone had let's say I had 50,000 shares and I want to
Yeah.
sell it all in one day, I will take the price.
Yeah.
So-
As easy as that.
So essentially, because it's like a T20 stock, it's like only like rich people can afford it.
T1.
T1 stock,
T1
right?
stock.
So basically, that makes it more volatile.
No,
It's not volatile.
it's not volatile.
It just depends on the liquidity of the share and it's more sensitive. I will use the
Yeah,
word more
more
sensitive.
sensitive.
Okay,
rather than
okay, no,
volatile.
that's a good word. It's a good word.
It's more sensitive.
Yes,
that
yes.
means that because it's only Alvin Holdings is Nestle, he wouldn't want to sell.
Yeah.
Okay.
Yeah.
So there's not much of seller,
not many sellers, not many buyers.
not very buyers, right?
Right,
and
right,
I
right.
can't afford. He make more money because he more money 20 years ahead of me.
Yeah.
So I wanted to buy Nestle, but there's no seller,
Yeah.
right? So it's just a sensitivity
Interesting.
relative to the liquidity to the
Correct. It's
the
just
share,
liquidity
that's
because
all.
it's a bid and ask system, right? So buyers will always want to buy lower, sellers will always sell higher.
Yeah.
But if a seller needs money fast, he'll just hit the buyer,
He
right?
buy.
Are there other similar stocks to this? Like,
I think it used to be maybe like British American Tobacco,
Tobacco.
yeah,
something
BAT,
like
yeah.
that as well.
like foreign held companies that have a high stock price and
They don't split their shares.
They don't split their
Yeah.
shares. Yeah.
They own a big bulk of it, which
Yeah.
it never moves anyway.
Yep.
So
Yeah.
only very little shares are traded.
Yeah.
Or they got very high institutional ownership, right?
Actually,
that happens.
this are thing very interesting.
So interesting.
Is that years ago, 30 about years ago, we have something called second board. Second board, the share cap is 20 million.
Okay.
20 million.
Yeah.
And most of the second board company at the point of time, not now the A's and the lead market, is that around 50-60% being held by the owner. So what you left in the marketplace was probably only 1, 2, sometimes even 3 million. That will consist about 15% of your float. Okay. Sometimes as 30% is $6 million.
Yeah.
6 million shares in the marketplace.
Yeah.
So for the share to move up, you just have to buy because there's so little liquidity. So
Yeah.
there were even one time, much worse, I won't call worthless company that have much performance. People keep on buying. If you can go from $1 go to $30.
Yeah.
Just because the liquidity is so low.
Yeah. And so easy to affect the price then,
Yeah.
basically.
It's more sensitive to price movement.
Is this how
Basically.
penny stocks work as well?
I
Low liquidity.
mean, yeah, any stocks with low liquidity or low balance float, we call it. Because the controlling shareholders probably won't move that.
Okay, low balance. Okay,
low balance
understood.
float, yeah. So then you get,
Yeah,
price
But
movement.
that will be another topic because
Yeah,
low balance stock is also the trap that we have.
yeah,
Yeah.
it could be a value trap. as
But I
well.
mean, not a company with Nestle, right?
Okay, we'll put that KIV lah. I think we're
Very
talking
interesting.
about too many things.
Alvin had done something very meaningful in some of our courses where we have a company with a very low public float.
Yeah.
It could be a trap. So being people who are in the investing fraternity have to be very careful about all this sort of thing. But then definitely not with Nestle because Nestle have been known to be a good performing company doing billion-dollar business and a supporter of Milo. Okay.
I have some right here.
Yeah. I've been drinking Milo since as far as I can remember. I'm still waiting for my Milo truck to be down there afterwards.
Basically, maybe the message is share price does not always equal to business performance all the time.
Yes.
Yeah.
So just because share price came down
Yeah.
doesn't mean that it correlates with the business
But
performance.
your belief is also, for value investing is there is a true value, or at
Yes.
least what you believe is the true
Yes.
value,
Yeah.
and eventually sentiment will even out to reflect that
Over the
true
long term.
value
Over the long term.
over the long
But
term.
in the short term, you're gonna get some price value divergence either way.
Yeah.
Yeah.
And the price value divergence is where we can make our money lah.
Yes.
Okay, there's a lesson for you guys. Okay, I think this is the last topic. So this one was quite interesting. So basically, what we wanted to talk about was actually whether Malaysia was in a recession or not, and whether Malaysia is going into a recession. Everyone panicked a little bit last month, right? So that's why we talked about this. But in that conversation, one of the interesting things that came out was that Mr. Bo, I don't know whether you know about this, but Alvin said there was a hidden recession in the US.
I will believe so. Especially on the job data, they say they are having full employment, but then the real case in US is probably people taking 2 or 3 jobs.
Right. And basically, his rationale was that a recession is 2 quarters of negative growth, and the US actually had that post-COVID in 2022. But they changed the definition of that just before or just after?
No,
or?
I think there's a bit of so generally if you kind of talk about recession, basically your economy is not growing but shrinking.
Yeah.
Okay, so when I did economics in university, it was loosely defined as 2 negative
Consecutive
quarters of negative GDP growth,
Yeah.
right? But of course, over the last 20, 25 years, the economics, the economists fraternity have changed that definition somewhat. They look at jobs data, unemployment. They look at a few data points to then call it an official recession or not.
Yeah.
So what happened in the US was during COVID, during lockdown, obviously there was 2 negative quarters. So yes, we was in a recession, but the official recession in the US technically lasted only 4 months.
Right.
But if you look at the GDP data, there was one that happened in 2020 and another one that happened in 2022 when they started increasing interest rates from 0 to 5.5% and inflation peaked at 9%.
Yeah.
Right? So of course there are many schools of thoughts to say no, it wasn't a recession because jobs data was looking good, and blah blah blah, right? But I think this is where a little bit of the political element comes in as well, because no president on his watch would ever want to say that we are in a recession, right?
Yeah.
You want to admit that.
Yeah. So so we brought this up because there's been a lot of press coverage to say that US will be in a recession next year, and my view on this is that we've already had 2 in the last 4 years. I think the probability of having another one is fairly slim lah, unless the Federal Reserve does something crazy.
You're smiling,
again.
Mr. Bo. Why?
Yeah.
No, because Alvin is looking at financial data,
Yeah.
and he tried to analyze the data. I'm a person because I have this advantage of additional 20 years ahead of him because I've actually gone through 86,
Yeah.
97,
Yeah.
2006, the subprime.
2000.
Yeah, Alvin went through 86 as well. How old were you?
I was 4 years old.
Must have felt it. How much do you have in the market at that point
Black
in time?
Monday, right? Black Monday. It's 1987, right?
How much do you have in the market?
October
How many
1987.
diapers did you have in the market?
I was 5. Actually, I don't remember much.
So I'm one person who believed walking on the street
Okay.
because I knew how a recession felt like. Okay. It was bad. Okay, it was bad. Okay, you will feel that. Hey, you go down, people saying no business, the shops are empty, closing down, right? So when we were looking at all this data, as I said, this year January I was in San Diego and I went to San Francisco. Then in May I went to UK Liverpool.
Yeah.
Okay. Then June I went to China. Right. I use my own assessment on the street, the things that I see. Right, okay. I personally felt that US and you just imagine you were in San Francisco. You go to you have to go to the Golden Bridge. Then you had to go to the Fisherman Wharf.
Okay. Yeah.
Right, and quite pathetic. I mean, there are rows and rows of shops which are closed. Business the number of people were less. You walk in Union Square, you just don't feel the vibrancy of a city like San Francisco.
Yeah.
Which is strange.
Which is strange, right?
Which is strange because I've been to US previously
A few
when I was in
times,
employment. I go to US every 2-3 years. I went to LA, I went to New York. Well, so I travel around. There's a sort of vibrancy down there. And I've been to UK many times as well, right? Okay. So I can feel a lot of vibrancy many years ago, but this particular trip this year to 2024 January, I don't feel that. In fact, my wife went to the US for the very first time.
Yeah.
So when we first touched on San Francisco, she got a bit of a jolt. Hey, why there are so many homeless people around?
Yeah.
So that gave her a bit of different perspective.
Okay, I mean, you bring up a very interesting point because the very next slide that in this post, right, actually shows that Alvin's conclusion is you should expect a recession. It's part and parcel of the market cycle for over 100 years, blah, blah, blah. Now, here's the interesting thing to me, at least. I've been in the workforce since, let's say, 2000 now when I graduated, right? And in that space, there's been 2 recessions in Malaysia, according to your
2008 and maybe 2000 to a certain extent, and 97.
Yes.
Okay.
And of course, COVID.
Yeah, and of course, COVID, right?
Yeah.
Personally, COVID maybe felt like it, definitely. A lot of businesses closing down and stuff like that. Like, I felt that. That was probably the first time that I actually felt, like everything was like you said, like on the ground, you can feel people just don't
I
have
don't think
that
you
kind
feel
of-
2006. Because 2006, the subprime is very much US.
Yeah.
Malaysia was
So-
just
It's a little bit.
a little bit.
So that's exactly my question, right? Like, in that time, 2000, obviously, I wouldn't have felt it because, my parents probably bore the brunt of it rather than me. But in 2006, 2008, all the way up to COVID, I don't feel like I've ever experienced a recession.
Yeah, I think Malaysian will learn a lot, quite a fair bit during the 97 financial crisis. So
Correct.
we have a lot of mechanisms to protect the national economy, right? And
Can we talk about that a bit? Like, what's protecting our economy?
Well, number one, saving rate. I think our saving rate was pretty high. And also at the point of time, we have a lot of industrialization, a lot of things been going on, building a lot of infrastructure. So infrastructures, the economy, then you actually see things are moving, may not be the kind of pace that you want, okay, like speeding all the way, but you keep on moving. So that gives you the momentum. But the recession is saying you see things being stagnant, okay?
Yeah.
Things you can literally feel on the street being stagnant. That is what I fear.
Like MCO, there's no one on the street.
Precisely. You go out, oh my, what happened? Chill. No, you want the kind
Apocalypse.
of serenity.
Yeah.
But it's kind of scary,
Yeah.
When you go down there,
Yeah.
there's
Yeah.
not.
Yeah.
Hey, you go to the busiest street in Kuala Lumpur and nobody walking around.
Yeah, it's
Get
called
scary.
Chinese New Year.
Chinese is different. Chinese New Year, I will probably lie on the road and hey, this is chill time because everybody back in kampung. But this is during a normal day,
Yeah.
not a public holiday, and
Yeah.
the city is just being quiet. That kind of feeling is chilling. That's how I felt when I was in San Francisco.
But so I mean, aside from COVID, and COVID, like, the world felt it, right?
Yeah.
So when the world feels it, you don't feel so like, oh, it's just us or it's just me or whatever. So I feel like we've not really, Malaysians, the majority of Malaysians, especially in our age group or whatever, have never really been through a proper recession.
Like a 97.
Yeah.
Yeah, 96,
Right?
97.
And,
I think
and does
COVID
that
came
have
pretty
any
close.
kind of effect on our financial planning? Because like you said, you need to plan for something like
Yeah.
this to occur.
Yeah.
Do you feel like, there's a danger here that we've never felt a real recession before?
I mean, I guess for me, running a business, this was my first major recession.
Yeah.
Yeah. The COVID period. Yeah. So I guess maybe back to your question of what made us a bit different. I think 96, 97, the reason why we had to peg to the USD was really because our foreign reserves were down to 500 million USD.
Yeah.
And like what Bo was saying earlier, yes, our saving rates have gone up. Today we're at 110 billion USD. So we're a bit more insulated or from external shocks. Good and bad.
What's the bad?
Well, the good is that we're so well insulated. When market goes up, nothing was
Right.
So
we watch. Sure.
and I think since 96, 97, generally I think the regulators and the governance of it has been always been to take that prudent approach.
Yes.
Again, good and bad. When you're prudent, you're safe. You don't have that risk mindset.
Yeah.
So when you don't have the risk mindset, then growth is about taking risks, right? So then you may lose out on some growth, right? So I think that's kind of. I think before that, I'm not sure if correct, but I think before 96, 97, that major shock that shocked the whole country, I think generally, we were growing at 5, 6, 7% a
very
year.
high.
It was a very high growth kind of thought process until we got hit so badly that, we just taken that.
We were
approach.
considered the 4 tigers of Asia.
Correct.
Right. We were really gung ho. Everything was beautiful. Everything was big. I think at the point of time was very different because Malaysia was transforming from agricultural based company to an industrial company. So we're having Northside Express being built, Twin Tower being built, all the corporate KLIA being built. So everything was big, and Malaysia can take a lot of pride. We have had Vision 2020 at the point of time.
Correct.
This is the era, right? But the financial crisis taught us to be, hey. You are not well insulated.
Don't so gung ho.
So we tend to know the name of George Soros, people like that. But then the government learned, right? Like what Alvin said, so now they have gone to the other extreme, to be a lot more prudent than that. But talking about if we come back to US, from my own gut feeling from the ground, I think it's really coming. And Warren Buffett is keeping the most amount of cash in the entire history of Berkshire Hathaway. The most amount of cash. He's going to hit the $1 trillion company, join the big 7 very soon, I mean.
So you guys are at odds on this, lah. You don't think there's a recession coming, but you do.
I think if the Federal Reserve acts fast enough, I don't think the recession will come.
But I personally think is structural wise, we have because you have to look at the geopolitical because of the kind of involvement US have in other part of the world, right? And there's a change of presidency this year, so their national policy and then the foreign policy will determine whether which part they go, right? Okay, but I think Malaysia, I'm actually more positive about Malaysia because Malaysia is protected now. They're not only depending on US. In fact, Malaysia trade with other countries is actually higher than US right now. So it's less dependent on US. It's more dependent on China and other countries.
And we also have a lot of stagnation to catch up on. Like basically we've been stagnant for a while and there's a lot of growth potential there.
Right.
So I feel like you've said this so many times already.
I agree. I think Malaysia has a good potential regardless of what happens.
What happened in US.
I mean, maybe you can just close off with that, I guess.
Yeah, I think because we've had a revolving door of prime ministers since 2016, so I think it's good to see some form of stability that's happening, some plans, some long-term visions, and I think I'm quite excited of some of the mega things that we've changed from being infrastructure led now to be more policy, like the special economic zone in Johor, things like that. I think that's positive for Malaysia overall, and for the market. Yeah. So I think that's it. That's all the time we've had for today. Thank you all of you guys for tuning in and listening to us. Mr. Bo, thank you for being our guest for this
thank
month.
you for inviting me. Thank you,
Chuck, thank you for being here. Otherwise, I'll see you guys at the next Borok Bursa. Thank you for tuning in.
Bye.